Good morning, everyone. It is a Hawkeye session. I got Al and Deb with us this morning. We're going to do things a little bit different. Al's going to be monitoring the trades, the alerts, and things like that in the charts. But before we started, we want to go ahead and talk about a little bit different plan of attack for the first 10 to 15 minutes of today's session. Again, you're in the Hawkeye session. This is our day trading session, scalping. I would call it lower swing trading opportunities. And again, this is for education purposes only. It's an education decision support framework that we're going to give you guys. And we got your disclosure right in front of you that I don't want to really fully read, but I'm going to take bits and pieces from. That way you guys understand what you're actually sitting in. Again, Hawkeye will never guarantee any sort of profitable trade. We cannot do that. Hawkeye does not remove any sort of risk. We hopefully give you some education where you can remove some risk yourself. And let me get that back over there. There we go. And then it does not. We're not going to judge you for bad trades, bad management, or anything like that. We're going to try to help guide you through all that mess. Again, in trading, whether it be currency market or any other market, involves substantial risk, and it's not suitable for everybody. So don't feel like you have to do this all alone. And if it doesn't fit you, then you just step away. So as we found out over the last few months, the market conditions can change very, very quickly. We've moved quite a bit away from automation right now because it's very, very difficult in the environment that we're in. So just be aware that we're going to show you some tools that we use. We're going to show you our charts. I'm going to really dive into the basic trade plan that we use here in Hawkeye. Any past performance that we might have is not indicative of any sort of future results. Just know that. Understand your own personal risk tolerance. And then again, we can't control the market. We don't make predictions. We can't control broker execution, spread, slippage, or anything like that. All trades are your personal choice, and never risk any money that you cannot afford to lose. I'm gonna go ahead and get out of this and dive into this. I'm gonna blow this up just a bit so you guys can see. We created this trade plan to help guide you guys. Everybody comes in the room and they want to learn, and that's great. But until you have a plan that you can stick with, it becomes very, very difficult for you to succeed because there's no way to actually keep track of what you're doing if you're just randomly throwing darts at a wall and hoping something sticks. So, and that's what a lot of traders do. They come into a trade community with a lot of hope, and then they do everything hoping something sticks, and then they get disappointed. We don't want that. So today, this morning, while we're prepping and Al's keeping an eye on the market and our alert systems and the charts, he can interrupt at any time. We're just going to go over a trade plan, and I'll make this available to anybody who would like to review it or have a copy of it. And what I would encourage you to do is take it, edit it to make sense for you. This is what we're going to be going by, but that does not mean you have to go by it. So I'm going to read a lot of this because it's really good material, but just understand this is about a 3-page trade plan, but it's really not as much because we've taken and spread out the text so it's easily to read. It looks very, very professional and laid out properly. So if we were really going to tighten this up and have to have a printable version, I could probably get it to a page, maybe a page and a half, if you get rid of all the nice text quality and stuff like that. So again, Hawkeye, the session itself, Al's trading plan is not built to catch every trade. We're built to basically qualify those alerts and only do trades with discipline. So our job is very, very simple in our sessions. We'll repeat this over and over again. We're going to wait. We're going to qualify. We're going to enter a trade. Then we're going to manage it. We're going to stop what we've done once the trade is complete. We're going to record what happened, and then we're going to continue to repeat. That gives us a repeatable tracking mechanism that we can use to analyze how we're doing with our particular rules, how we're trading, time we're trading, and the assets that we're trading. And that gives us our goal is to get about 100 trades under our belts before we ever change any of the rules to increase its profitability. So a reminder, a good trading day is not measured by how many trades you may take. It's measured by whether you follow that plan or not. And the purpose of our trading session every day that we come into the Hawkeye is designed basically to keep trading as simple as possible, repeatable, duplicatable, but more importantly, disciplined. We're not trying to prove how much we know to you. Our goal is actually to protect our own personal capital, follow the qualified steps that we've created, and avoid those emotional decisions of fear, greed, revenge, FOMO, all those things that you guys are all familiar with. Our focus statement for purpose is the goal is not more trades. The goal is better trades. We talk quality over quantity. That's usually the flip of most traders out there. Most people over trade, especially day traders. As I remind you, this is a day trading scalping session. 95% of day traders and scalpers lose money. And that's mainly because of over trading. So we're going to be very, very careful on what we choose to choose to trade, and it's got to follow certain rules. So the market is not going to reward the the amount of activity or the amount of time you spend in front of a screen or what you're doing at your screen. It's going to reward the discipline you do at your screen. So again, our trading window, and this could be changed. We may be changing this a little bit, but we wanted to make it wide enough so you guys can follow through. Al normally will show up at 7 o'clock in the morning and go to noon. We've talked about this regularly. Our goal is to be out of here by 9. So it's not to stay till we would love to have 2 or 3 trades by 9 done and walk away. But we always like to leave that window to noon just in case we want to have a learning environment or some new trades pop up later in the session that we're not there. So we will not have any new trades after noon. That's one of our rules. And if a trade is already active near the end of the session, you have some choices to make there. You can manage it, continue to manage it, close it out, whatever you choose to do. But no new trade will be opened after that trading window. And we may switch that down to even lower than 12 because 12 we're finding is late in the session for new trades. Remember, the trading window is not permission to trade the whole entire time. We've talked about this with Al as well. One of his goals is to be able to walk away and go do what he wants to do. And you should have the same philosophy to be able to walk away from a trade knowing that you followed the rules. Whether you leave the trade open or you close it, does not matter, but you have the permission to walk away and not have to sit in front of a screen. So it's simply the window that we're going to use to qualify our trades. And just because the market's open does not mean you need to be trading all the time. So our markets and timeframes, right now we're just doing currency markets. We're going to be opening that up. We'll talk about that at a later time. We're mainly on the 15-minute chart, mainly on and from time to time we do go to the 1 hour chart, but our focus statement for our markets and timeframes is we trade the plan and not the noise. And if you've been in day trading, you're going to see a lot of noise. You're going to hear a lot of noise. There's a lot, but you still got to stick with the plan. Our main tools, again, is very, very simple. Hercules, fair value gap is what Al has added to the equation that we do not create. But Hercules we create, Tide Fusion alerts we create, Sherlock Atlas and Sentinel is all TradeMaster stuff. Those members that are members of TradeMaster community, you automatically get Sherlock for free. So there's a lot of value here as well. So a trade should not just be taken simply because one of our tools gives you a signal. That's not what it's about. Hawkeye is going to take all these tools and we're going to evaluate. So you need to have that alert support and structure that we talk about all the time. And most importantly, you need to make sure you have room to target, and we'll talk about that here in a moment. And then proper Hercules confirmation. We'll talk about what that is, and you'll see that on our charts as well. So one alert is not a trade. An alert is just a reason for you to look at and investigate that particular trade setup. Here's that Hercules minimum that we're going to give you guys some flexibility on. Al and I are still kind of playing with this as well. A Hawkeye trade requires a minimum Hercules score or a spread of 5 or more. And that seems a little high and tight, but we're doing day trading. If 95% of traders are losing money, we need to be more efficient. We could change that to 4 if we find that that works. But right now, we're going to start with 5 or higher on the spread. We'll talk about that. You'll see that in action here in just a few moments. So you can, if you're new to Hercules, you will see what we're talking about, knowing that we have the proper spread. That is a key element we're finding, even when we're using our Tide Fusion alerts. When it comes to day trading, we'll talk about that as well. So if there is an alert, and Al's looking at it right now as we speak, he's looking at some alerts that came in overnight. You cannot stay up all night long and wait for Sentinel alerts or Tide Fusion alerts and trade them immediately. So when you come up in the morning at 6 o'clock Central, 7 Eastern, and you notice that there's an alert, Al's going to be doing some monitoring of that, and he's going to be doing some analysis of those alerts to see if they're still valuable to us. and see if they're in a position where they have not moved away from the general area of the alert, or they've moved away, but they've created a retraceable opportunity. He's going to let you know about that towards the beginning of our session each day. So, that's one of the first things we're going to do because everybody's in that fear of missing out. But if there's an alert been set, then there's a reason why that alert's been set. It does not automatically guarantee that we're going to go in the direction of it, but it gives us something to look at as we start each of our day. Then we have a checklist that we have to follow in order to qualify each trade. We talked about the one qualification, making sure that Hercules is 5 or higher. You could change yours to 4 or more, or 3 or more, depending on how liberal you want to be with your number, but we're going to start in our room with a 5 or more. And we need to make sure that when we get the alert that our price has a movement with our trade plan that we're going to be using. Our price has to have enough movement where there's no major restrictions to at least get 10 pips move. Okay. And that 10 pip move will become a very, very important piece of the puzzle here in a moment. Now, what we do in the day trading, we're going to take a 14 pip stop and we're going to have a target of 17.5. That's a 1.25 to 1 risk to reward ratio. So we want to make sure when we do our checklist that we're not directly going into some obvious resistance or support level that's going to conflict with our movement. We want to make sure we know where Atlas is at. We want to know where Sherlock is at. And we want to look at any possible major barrier or opposing fair value gap. Now, that does not mean that those are going to necessarily hold, but we want to be at least aware of them because we can then anticipate, okay, we've got some headache here. It's not going to be a smooth ride necessarily. It doesn't mean the trade won't work out. So just make sure that the trade also is inside our trading window time frame, and make sure that you as a trader are calm, you followed the plan, and you're ready to move forward. So if we talk ourselves into a trade, it's probably not a good trade if you have to talk yourself into it. So our entry rules are pretty very straightforward. We're not going to chase anything. If a qualified alert appears, whether that be a Sentinel alert or a Tide Fusion alert, and we're going to talk about that right now. Tide Fusion is designed for swing trading, but in the Hawkeye session, Al has used some older numbers of Tide Fusion when we are early in the stages to massage it into fitting his trade plan. So it is not going to be used the same way as it does for swing trading. So don't confuse. Just sit a Tide Fusion on, take the alert. There's more to it with the day trading because the numbers have not been maximized. I should say the numbers on Tide Fusion have been maximized for swing trading, not for day trading. But Al's had an incredible way of making it work. So basically, our entry rules are we're not going to chase. We're going to wait for the price to come to us and trade the plan instead. Our risk rules are very, very simple. Now, at any time, Al can change his trade plan, but he's going to have to write it in here. Right now, we're going to risk 1%. The hard stop is always going to be 14 pips. The target's going to always be 17.5 pips. Risk to reward structure is always going to be 1.25 to 1 until we have 100 trades under our belt and we can find that maybe there's a little higher we can go. We don't know yet. So the target is not randomly going to be moved. Position sizes has to be calculated prior to entry. If the position size is unclear, then we just skip the trade. That's a key rule. So protecting capital is the best part of things. You have to be able to protect that capital. Our first job is not to win. Our first job is actually to survive to trade tomorrow. Our trade management is very, very simple, and we went over this yesterday and did a number of trades using this theory and had great success with it. So we really nailed it down. So once we enter a trade, Al is going to management. You're going to see it that we're going to wait for a 10 pip move. When it hits its 10 pip move on it, now remember our target's 17.5. But when it hits a 10 pip move, Al's going to close 25% of the open position. That gives him a little bit of a profitability. But most importantly, at that moment, he's going to then move his stop to 7 pips above his entry or 7 pips below his entry, depending on which side of the trade he's on. That does a couple things. Number one, he's going to get a small 25% of his position already profitable at 10 pips. But now he has an open trade where he cannot lose. It will not be a full trade, but we're going to let that 75% run, and we're not going to do anything away. So if you're in a trade, let's say at 10 o'clock and you're ready to leave, but you've already moved your stop to the 7 pip, you can walk away with confidence. you're either going to hit your full 17.5 or you're going to be stopped out. You have no way of losing any money at that time. So you're in a very favorable position. So we've done some calculations on that, and that is going to be majority of the time we're going to reach these. And majority is 51% or more. So I'm not saying 90% win ratio, but we've mathematically looked at this, and this is a very, very strong system. If it goes according to our calculations, we'll have well over a 10R rate of return. So 10R is if you're 1-to-1 on a risk reward, 10R is 1-to-1. So we're going to be over a 1-to-1 ratio, which is what you want, profitability ratio. Normal trade outcomes, I'm not going to go over that. I already kind of did that for you guys. These are normal for you guys to expect, which removes any of the emotional piece. This is my OWL rule. And anybody who knows Al knows he is a former pilot, and I think he's a mechanical person, so he likes to tinker with things. So I call this the no tinkering rule. And so after an entry, a trader may not manually close the trade early unless there is a major unexpected news event. Now, in our session, you're not going to have any unexpected news events pop up. All news events are going to be covered at the very, very beginning. Now, you cannot, if you have a rule that 15 minutes before a major news event, you want to close it out, that's what we're talking about here. But you're going to know about them. If we know there's going to be if there's any sort of platform or broker issue it's something that's crazy happening, close out your trades. If you see some abnormal spread behavior, these don't happen often, but you can sometimes things go weird, and when you see weird, you close out. These happen often. Accidental incorrect entry where you actually put the trade in upside down. So you wanted to be long and you end up putting a short in, close out the trade for a small loss. Um, and if there's any major, now we don't anticipate this, but if there's any major invalidation from the tools. So for instance, with this market currently, Sentinel's been a little weird. Sentinel was not designed to be in this type of very, very chop market, nor was Tide Fusion. Very, very chop, news-driven, oil-heavy type environment. So be that those aren't major tool invalidations. That's the tool actually working. But if you start seeing a tool working very, very strangely, definitely let us know. Um, and then close out your trade so you don't take any sort of unnecessary loss. And just so fear is not a reason to close any sort of trade. Boredom is not a reason to close a trade. Small profit is not a reason to close a trade. The I think I know better is not a reason to close any trade. Tinkering, it usually feels like expertise. Like you've seen this before in that moment, so you know that this is going to happen. But many times, basically, that's just fear and greed rising up, and you end up finding out that if you had just left it alone, it would have done exactly what you predicted it to do. Just remember that a lot of our tools out there in the world now are built upon the emotions of traders and understanding how traders think. We don't want to think like the crowd. We want to stick to the plan. So expertise is actually proven by obedience and not interfering with your trades. Daily stop rules. These are very, very hard. Two losing trades. I really like the 2R loss better because I think you can have a losing trade and it be smaller. In our case, you won't. And I would say in our case, two back-to-back even losing trades, it's time to walk away. And definitely if you've reached the 2R, which is for us 2%, walk away. There's no reason. So a small loss accepted with discipline is definitely better than a large loss created by your own pride. Maximum trade. Right now, we're going to go with 3 total trades. And the reason being is if we follow our rules, we're going to be at our 1 to 2% a day. The key is finding that 1 or 2 high quality trades. That's what you're really looking. We may change this to 4 total trades within that window, and maybe even up to 5 when we find how successful we are going to be with the numbers. But we will make that change after 100 trades. More trades does not make you a better trader. Better decisions make a better trader. And so when you're done, you're done. Walk away. It's not time to go to your demo account and just tinker because however you practice is how you're going to really play in the real world. Correlation, be careful of the correlation. Make sure Al's may have 2 trades. He's been doing this a long time, so I feel real confident in him having 2 possibly three, but we're going to stick with two trades active at simultaneously because the fact is if you have more than that, usually, especially in day trading, they're going to be correlated, and then you may end up wiping out your profits because of that. We have some walk away rules. I'll let you guys go. The trader who can stop is stronger than the trader who must keep going. So, walk away rules. These are giving you permission that once certain things happen, you're going to walk away. That doesn't mean you can't hang out in the room and enjoy community, but you're going to walk away from the trading and tinkering on your screen. We got a discipline statement that we're going to read every day, at least personally read it to ourselves, that make sure that we stay with our trade plan all the way through. At the end of the day, we'll do a daily review. Did I follow the plan? How'd the plan work out? And again, it's all about being a good steward of what God's given us already. In Proverbs, it talks about the plans of the diligent man leads to surely to abundance. I think that's the key. I think we've got a lot of people in our world right now that they're just wanting a quick buck. They're leaning on hope. And the more chaos the world gets, the more hope they're looking for. Your hope is being disciplined. Be that 1%. The 1% do not tinker. The 1% know exactly what they're going to do. They follow the plan. And if the plan after 100 trades does not work, we adjust. We don't throw out the whole program. And that's the same thing with any tool. If a tool is not working, now that we've got multiple months now with Sentinel and Tide Fusion, we can easily go back and do another back testing and see, okay, what did we learn over the last year? And we've learned a lot since the Middle Eastern conflict has happened that chop is not good for these tools. And there's no trend on the Tide Fusion swing that's really being established because trends are changing on a day-to-day basis because of news items and oil. So that is our trade plan that we are not going to go over every day, but we thought it would be beneficial for you guys to hear in the first 10 to 15 minutes. And we will make that available to you. If you'd like to have a copy of that, just let me know, either for the members in the Telegram channel, for those who watch it on YouTube. Definitely, just send us an email at trademasters at gmail.com or support at trademasters.com, either one. Al, are you ready to share your screen? Yep.
Yeah, I am. Actually, I'm seeing a few things that are starting to get my attention here.
Let me go ahead and stop sharing mine and turn it over to the expert of the hour.
Okay, so right now what I'm doing is I'm looking at,
There you go. There we go. Make
okay,
sharing your screen. I can
so
see.
right now I'm looking at the basically all the different pairs that we look at trading, and I'm looking at them all at once. But primarily what I'm focusing on is Hercules. As you see that with Hercules, like we said in the trade plan, that we're not looking at anything unless we have at least a 4 or 5 pip spread on the Hercules. Preferably, it should be above a 5, and have at least a 4 pips, 4 number spread. So, like if you look at the Aussie US, we have a 7-0. That tells me that the Aussie is real strong, the dollar is real weak, and that seems to be true. If you look at the overall Hercules chart, you're going to see that that is true. That on all 4 time frames, the Aussie's strong on 3 of the 4. Dollar is weak, the yen is weak. So we're going to be looking at trading in the strength of the Aussie if we get a signal. Now, as I look at this Aussie US, you can see where now I said I'm pretty much using the Tide Fusion set up for a 15-minute chart. And what I like to do is I like to see where, first off, first thing is, do I have a spread of 5 or more? Now, what I started doing on my charts is I'm putting a little on the 5, I'm putting a little line here and I'm locking it. There's my 5. Because a lot of times when you have these all scrunched up, you can't really see it that well. And I have a 1. So what I do is here's my 5-1 rule. So basically, if I'm looking at my Tide Fusion and I see where it's starting to come, where it's starting to cross over the dots, there's a few things I'm looking for. And this is usually will be the setup before a pending alert. It's up to you whether or not you want to try and be early, aggressive, or just wait for the alert. If the alert is telling you that everything is in line for the trade. Now, what I like to see is like to see it close. Now, you see the ribbon on the Tide Fusion. If I'm going to go long, the ribbon has to be green. We have to have a close above the dots, and we have to have a spread of 5 or more on Hercules. So if I look like right now, this is above the dots. The ribbon is not green yet. This is above the dots. The ribbon is not green yet. I cannot do it. Hercules is on board. Now, if you, I'd like this, and what I'm looking at right now is I'm looking this as a potential setup, or very likely there's a good chance we're going to get a trigger when this 15-minute candle closes. There's a good trigger. We have a nice little gaps developing right here. And let me get my fair value gaps on here so you can see that. You can see I've developed a nice 15-minute fair value gap. Now, if this thing closes, if we get a close on the candle, I can start getting my chart set up so that I have my template, which has a 10 pip target. Here's my entry, here's my stop. And so let's just say, for example, this thing gives us a signal when this candle closes in another, let's see, how much time more do we have here? We have about another,
Four minutes?
we have 8 minutes. We still have eight
Oh,
minutes
you
on
got
this
15.
candle. We have 8 minutes on this candle. Now, there's a good chance we're going to get a signal on this thing, but we'll just have to wait and see. But if we get a signal, now let's say this thing, let's just say we got a signal on this. I'm just showing you what the potential set would be. I'd have that set there. I would be looking at a potential entry point. I have my 10 pip target, my 14 pip stop, and I can start setting this thing up for a trade. So this is Aussie US, and I can do my standard. I just saw how to do this just yesterday. And so I've got this has to be one pip, stop loss, 14 pips. Oop, 144, 114 pips, 1 pip risk. Put this in units. So this is how many units I would have for 1% risk. If I get it, if I have a trade, if I set this thing up for a buy limit, and that right now, I'm just projecting that say we get a trigger. This is my entry. I have all set up. I have my target or my stop. I have my 7 pip. There's my 10 pip target. So if I get the trigger, I'm all set to go. Now, I'm not taking any trades yet, but I'm just sort of getting things. This is a projection. We already have it's above the red, but the ribbon is still red. I want to see the ribbon turn green. The ribbon can be for the ribbon. Ideally, the ribbon should be above the red. Again, this would be a method I'm looking at for a potential early entry. We have the spread. We have a 7-2 spread. Now this thing's starting to tighten up a little bit. So right again, we're just in the wait mode. But the trade is all set up so that if I get a trigger, I already know whether or not I want to get in or not. Now, this thing you can see where the blue line, which is the dollar, green is the Aussie. You said I have a strong Aussie 7. The dollar is going back and forth over the one. But this gives me kind of a quick reference as far as whether or not I could possibly get a trade. So this is a potential trade set. If I get the alert, I already did my homework. I know that, okay, if I get the alert, I'm good to go. And so right now, we're just looking at that. So I go back to my other charts, look at the same thing. 2-0, not even a consideration. 4-0, possibly it is starting to go across the tide. We do have a red ribbon. This has a potential. The British US has potential. 5-0, the US Swiss, that's starting to get to have potential to go. The Swiss is strong. Swiss is the first currency or the second currency. So we'd be looking at going short to the downside. Now we already have the crossover. Right now this is a nice little trigger. Right now we have a 7-0 at this point right here where we have the close below the red ribbon, but we don't quite have the spread here. There's as a 7-3. I'd like to see a little bit more. Let me put my lines in here.
7-3 being a 4, right?
7-3, yeah. Let's lock this in. And put another one in here for the 1. Let's just take a little, let's just dive in on this one a little bit. This candle right here, we had the ribbon, close below, red ribbon, close below. This would be what I would consider to be a potential ideal setup. Although if you look down below here at the Hercules, we have a 7 and we have a 3. So it's still a little bit early, but it's still, you can see where it would have pulled back. But let's say this was the entry. Let's see, do we get it? Nope, still no. I thought I might have worked there. I do like this candle. Now you can see with this candle, if I put my trading program up here for the short, and I have templates made up for most of these. Here's the target. So here would be the 10 pip target. Here's the 14 pip stop. Now we don't have an alert on this trade, so and each one of these I generally have set up specifically, and I'm going to go through and redo those again. This is what we'd be looking at. But let's say we got in here. Here would be your 10 pip. So at this point, you take off 25% of your trade, and then you'd move your stop to 7 pips below the entry point. In this case, it would be 34. You'd be taken down to 27. 27, you probably would have closed out the rest of your position, and you can come back and you can wait. If it didn't close you out, then you have a template so that I can go to the 17 pips, and this would be my ultimate target to get out. But you can see, like right now, it is starting to change a little bit as far as Hercules starting to change a little bit. So again, this is we still haven't hit the 10. Well, we did actually hit the 10 pip range. We hit
Hmm.
the 10 pip. We would have had profit. Come back here at 20. We got in at 34. So 27 would have been our 7 pips. We've gotten out of the first quarter here. We've gotten out of the second quarter, and and now we're done with that trade.
And
And then
done
we
relatively very quickly.
and it's been really very quickly. But you can figure from if you have gotten in here at this would be at 6 o'clock, you have been totally out of your trade by 7:45.
Yeah.
This is just an example of how we're going to be playing this. And but I said
And
we
this
don't
plan sort of seems to fit the chop play.
it does fit the job. It gives you the it gives you the momentum. And oftentimes the other thing too is I like to see that fair value gap. Once you like right here's the if there is no gap right here. There's no bearish gap. And I like to see a bearish gap somewhere in the way there. But right now I'm not seeing any. There's a bearish gap right here. Here's a bearish gap. Here's the close. Here's a candle three. Here's the other candle. Here's the gap. And you can see when this thing triggered, we had a nice little gap here. We had a pivot high. And if you really look over to see, you can see where your pivot high, your stop is above that pivot high. You can see where you have a gap in between. So that's a little bit of rebar for you. And then so that would have qualified that as a uh, potential to look the trade. Now, biggest thing you have to decide is do you want to wait for the signal, which you're probably going to give up some pips, and the jury's still out on that one. But so these are the things that I'm looking for before I take a trade. Hercules has to be on board. You have to have the close below the dots. The ribbon has to be green. And then you have to decide, is this just an early setup that could go south? Or if we get the trigger now, wherever the trigger is, if let's say this candle triggered here, well, then you just move everything down, and see where your stop is. Is your stop, well, it's above the dots. That's pretty good. Do I have a gap? I don't have a gap in here. So this would be the next pivot high. So right now, this would be a little bit, and then is Sherlock on board? So if we put Sherlock on, is there a target down here? Well, there is a target. If I put my 17 pips here, this is coming right into that demand zone. It's not fresh, which means it's been tested before, but that would be a reasonable target to be looking at. So, and right now we still have a 5-0 spread. Everything still looks good for a short, but we don't have a trigger. We don't have a sell signal. But a lot of times we find out until we can get these things a little bit more refined. You just have to make that decision on your own. But I'm not too afraid to take it once I get all the Hercules, the ribbon, the dots, and the close below. And then you have to see, does that fit the criteria? Do I have a gap? Do I have a pivot high above? Is my target, is my stop above any pivot or above the targets or above the gaps? So that's just something to be looking at. And I'll be looking and just gazing through all these. And first, 40, not an option. Here, this one is a five. Let's see, I've got to figure out. Need to get this thing up a little higher here so I can see it. I have a 5-0. That one's a potential. That's one we were looking at. 6-1. That looks pretty good. So we can take a look at this one. Now, I said we do have the trigger alerts, um, but here again, you can see how this thing plays out. I'm going to put my marks here. There's the 5. Lock that in. Here's my 1. Lock that in. So this thing's all set. So right now I have a 7-1. I look here. The ribbon is red, red, red. Now here it's green. I have a close above. This would have been a potential uh, entry point. Do I have the spread? I can just go right from the bottom. That's a 1, 1, and 5. That's a 4-point spread. I prefer to have 5. There we go. There we have a. This is a. That's a 7 and a 1. Close above 7-1 spread. That works. We have is a green. Yes, this would have been a potential entry right in here. Does it fit? Now, next question is do I have a pivot? Do I have 14 pips range between before I run into any problem? Do I have a gap? Let's see if we have a gap anywhere. We can just put the gap tool in. We have lots of gaps. So at this point we have a couple gaps. We have a pivot low. The stop is below the pivot, and we have our 10 pip rule. And you can see where this one would have worked out just very nicely. Take my 25% off. Move my stop to 7 pips above. This one would have, see right here. Let me take these gaps off here. We'll see how this thing would have played out. I said we didn't take this, but this is what you do when you're just sort of hunting. You're looking to see is there anything potential setting up. Right now we don't have a trick. We don't have a trigger yet, but if we had this trade set up, let's see.
My bet is this thing's going to give you an alert once we have ribbon green and dot line green, and we have that little breakout there. But again, are you saying at times that you could take this trade? When would you take this trade on a retracement or a breakout?
Well, at this point, I'm going to wait for a signal
Okay, so you would
because
wait for
it's
a
too
signal.
far away. Now, if it pulls back again and everything still looks okay, then I could take the trade.
Yes.
Okay. Um, Again, here we go. We're going to be looking at a buy limit at this point, so I could bring this on down to there. That sets my price, set my risk, set my stop, 14, and I got my units. Here's my units. Now, what I'll do right now, as I'm trying to set up for the trade, I'll look and see what the units are. I'll pull my calculator up, and I'm going to see how many units do I have. 92, 142. Good. So with 92, 142, and multiply that by 25%. So that's how many units I'm going to take off at the 25%, at the 10% target, at the 10 pip target. So I'll just sort of keep that handy so I have it. So when you set the trade, then I'm just going to set up the trade just so you can see what I'd be looking at. So let's say I have a buy limit here. Let's say if it comes all the way back, I'm going to buy if everything looks good. So I'm going to do a buy limit, 1% risk, 92,000 units, 14 pip, and I'm looking at buy. So now this target is this is going to be the 17 and a half pip target. This target is going to be the 10 pip target. And over here you can see with the 10 pip target, I can put this up here. And remember I said we had 23,003. So I'll just make this, there we go. 23,036, we'll call it. I'll just do that, copy, paste. Nope, doesn't paste. 23,035.
Mhm.
23,035. This could be my unit for the target two. Confirm it. So here's my 23,000. Now I got to subtract this from the other target. So I'm going to go back to my calculator. And you can maybe just round these numbers off if you want. This is kind of what you'd wanted. So we have a total of 92,142. 92,142 minus the 23,035 minus 23,035, 69,108. And so this is going to be 69,108. Okay, so right now, so with that, I would have my trade all set up. So I have my 10%, my 10 pip target. I have my 17 pip target, 17 and a half pip target. I have my stop, and I'm all set. So right now, if this thing comes back to this area right now, I can take the trade. Or if I get a signal, I can decide if I want to take the signal up here and then just move everything on up. This is how I would set it up. So we have our upper my ultimate target, we have our stop, we have our entry, and then we have the 10 pip target. And you can see it already. This one would have already made the 10 pips. So I would have been out with this one would have been triggered. So I've been out of that. Then I would have moved my stop up to 114 13. So my stop would have been moved right up here. And you can see that by the time I had this thing triggered here, I'd still be in this trade with the other 75% of my trade looking for my target. If it comes back and takes it, it's a profitable trade. I'm done. And I can reassess and maybe do it again.
I will tell you, Al, that the Aussie yen had a 4 hour swing signal. What time was that? Last night. So you're working off of a bigger time frame, potential uptrend. So that'll support what you're doing here too.
Yeah. With this method, it's real, very mechanical, very cut and dry. Uh, the biggest question you'd have to ask yourself is, do you want to try and take these early or you want to wait for the signal? Now you can see if you got in here early, by the time you get, if this thing does give us a signal, by the time we get the signal, we've already would have had lost this first move. And now you're coming up near the end where you have up to, you're getting closer to uh, your supply zones and having to deal with, do I have, now do you have to say, well, now do I have the room? Well, there's nothing, this thing seems pretty clear above. If I go to a higher time frame, see if there's, you can see I'm right here into a fresh 1 hour zone. It's coming right up into that. And so there could be some question whether or not you want to be taking it up at this area. This one looked a lot better. And let's see what else. The other thing, what I will do a lot of times, I'll check and see where the 4 hour wicks are. If I go to a 4 hour chart and I see we have some wicks right up in here, what I'll do is I'll just draw the wicks, especially right the wick closest to where the trade is at the moment. And I just mark that. It's a 240 wick. So I go back on my 15-minute chart and I know that this is there's a potential getting up here where it's going to be retesting those 4 hour candles way back over here to the left. And you see there's still plenty of room to the upside. The Sherlock is going to be more accurate on the higher time frame. So the higher the time frame, the stronger these areas are. But when you have a wick of a 4 hour candle, and you can see if you go to a 4 hour chart just for price action analysis, if you come over here and you have a wick, come over to the left, you have another wick, come up, and you come up over till you hit a body. This is the candle. This is the top of that area. So you actually have another wick area right up here. Here's the close. Here's a wick. You have another wick area right over in this area where here's the high, here's the low. This would be another potential area where you might be able to have a target. And you can see where this candle came right on up to the bottom of this, where this body is. Now that means that this, in fact, you have a high, you have a lower high. This thing could come up and give you a lower high, but you also know you have another area where you have potential to monitor. We right in this area right in here. So these are some two areas that you want to be paying somewhat close attention to, and you just put that on your 15-minute chart, and so we have a little reference for it.
So Al, setup question.
Uh-huh.
For the Hercules, you have two sets of numbers. Why the two sets of numbers? I'm sure someone will ask that. Typically, it's just
Yeah.
a set of
Well,
numbers.
the five, you mean about the five and the one?
Yeah, the five.
Yeah.
You have
The only,
75 and
well,
2 and 1.
yeah, the only reason why I did that is that when you put your cursor over, if you're up here, if you, it just gives you that way you know exactly you know that this candle is above the five. You know that this Hercules is above the one. So now you know that well this and this and then you can look at the numbers. But the question is, do you have the spread? This gives me this is my 4 point. I want to see I want the strong one to be above a five. I
Mm-hmm.
prefer to see the weak one be no higher than a one.
Mm-hmm. How did you get the two sets of numbers? That's the first time I've ever
Oh,
seen that.
oh, yeah, just take this horizontal line,
Mm-hmm.
left click, right click, and that marks it, and I can just move this thing up
Okay,
and down.
so it's not a Hercules setup question.
No, 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 it's not a
Format.
Hercules number.
Okay,
Just it's just a reference line is all it is.
got it. So when you do the reference line, it creates a second set. Okay.
Yeah. That way, if you're looking that way, if let's say you're looking at well, let's see, if you're looking at like this area right here, if you're looking at let's say there was a good example, like let's scan it right here. If let's say this was a would be considered possible. Now this is red, so I can't do anything with it. But if it were green, and say the
Mm-hmm.
green was down here, and this candle, I could look and see, just look at the reference line and say, okay, this is up above the five. That's good.
Got
This
it.
one is way above the one, so it's probably not so good.
Okay, good. All right. Just curious about the
Yeah,
reference. Okay.
yeah. So that's kind of where we're looking at with this one. So right now we still don't have a trigger. So there's something about Tide that it doesn't like. Um, but I mean everything right here, we had a seven and a one. That was a good. That was good. It was above the dots. That was good. Now the dots are not green. Now I think Tide really wants the dots to be green, if I remember correctly. And that's maybe why we're not getting a trigger
Correct.
because the dots are not green.
Yeah, that's and because what's happening is you've got one of our analytics pointing downward and one of
Right,
our analytics pointing upwards, and therefore that's not the structure is not clean. So that's why you're
right.
not getting it.
But as you can see, like right now, you say here, this is red, red, red. Now, if it's on a crossover like that, I don't take the trade. I would want to take it at this candle here. And then you just move everything on up. Just move it on up. Move your stops on up to your 14 pip. And you can just sort of keep tracking this thing as it goes along. Here's my 10 pip, so that would be here. And my 17 and my 1, 2 would be the upper one would be up here. And you can see that even this one still would have worked based on this setup here. And you have a gap? You have a gap right in here. This is a nice little gap. You know, you can see it's building nice little gaps all the way up here. And you're just building another gap. And if it starts building gaps like this, you can always maybe just let it run a little bit more than the 17 and a half pips. But just know that uh, and maybe go for that little bit longer run if you want if you choose to.